Good morning, Paul Georgie from Allendale. It's July 31st, the end of July, and Wednesday morning. Grain markets stabilized here overnight. Not a lot of excitement in either direction. The big focus, I believe, is spreading. It's buying the buying the September contract of corn, selling the deferred contracts in corn and beans. The opposite, we've seen some selling in the September contract and some buying of November beans as bargain hunters support that market. But tight cash supplies, stronger basis in the Midwest in corn yesterday prompted some of the buying and readjusting of the spread ahead of the Rogers roll that will continue today and into tomorrow's close. So spreading a major feature. One of the other factors is first notice day on the August contract in the soybean complex, and we had zero bean deliveries, zero meal deliveries against the contract. However, 846 deliveries in the soybean oil through July 19th. Weather news, we continue to see more rain in the forecast, continues to shrink that dry areas of the Midwest, Illinois, and even in Iowa as these rains move across. There hasn't been any massive rain system come through that drops moisture over the entire corn belt, but enough to support crop growth and maturing in some areas. The coolness is expected to continue here for the foreseeable future, which is good in some cases, and others are starting to talk about the potential for early frost. How much damage will an early frost cause on the crop, and those are factors that are being talked about here this morning. Another big focus is on the USDA supply demand report, crop production report, that'll be out on August 12th. Trade is trying to get a handle on what the USDA might do with corn yields. The trend yield they used last February was 163.6. The last USDA report in July, they used a yield of 156.6. So with improving weather conditions, will they increase that, or will they adjust that based on harvested acres? So some continued talk will occur here over the next 10 days as we go into that report. Outside markets, we've got FOMC meeting ending today. We'll see those minutes later on in the session. Bernanke will not be holding a post-meeting press conference today, so the trade will have to parse this report and then analyze how it might impact future decisions that the Fed might make. Tomorrow we have the European Central Bank meeting and comments, and then on Friday we have the unemployment numbers. So some heavy amounts of economic news coming out here in the next three sessions could impact attitudes of grain traders as well. In the livestock, cash cattle are still at a standstill. Product markets showed a little bit of life yesterday with choice up 37. However, select was down 56 cents. The feeder index had a nice rally yesterday, up 66 cents to 148.31. Pork complex continues to battle between tight hog supplies and packer margins and movement of pork. Cutout values yesterday were up 124, which should improve packer margins this morning. However, the supplies of hogs should continue to increase. Weights, we're seeing a little better than normal. Cooler temperatures is supporting that. Still a battle of moving this product through the retail markets. The forecast for good weather in metropolitan areas of Chicago and on the East Coast this weekend could help support the demand. We've also got first of month featuring by the retailer, which could support some product movement here. So we'll be watching that very closely as we go forward. If anybody has any questions, never hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day. I'll talk to you tomorrow morning. Thank you.